What's going on, everyone? It's Kevin here from Stock Hours, and today I'm going to be bringing you guys a video on one of the most important technical analysis tools that we use here in Stock Hours to help you either identify great trading opportunities or to stay away from high risk opportunities in the market. Without further ado, let's get right into the video. Okay, so the form of technical analysis we're going to be talking about today are trends, right? So when people come into the stock market and they begin trading, they just usually expect sort of like meme coin price action, right? So expecting things to go straight up or straight down, but that's just not how things in the market work, right? There's only three different ways that the market can move, right? There's uptrends, right? Or there's downtrends where we make a series of higher highs, higher lows, and then higher lows. Right, downtrends, they form lower lows, lower highs, lower lows, lower highs, and then, it keeps going on. The third one is that the market won't even move at all, which is typically known as a consolidation period. How is this important to us when we play breakout trades here in Stock Hours, right? We often like to use trend lines to help gauge us if we should even take a trading opportunity or to stay away from a trade. So the way that trend lines work is that they kind of give you a general idea of where price wants to head next, right? As you can see right here on Tesla, we have this downtrend, right? Where we make this high right here. We make a lower low, a lower high, lower low, lower high, lower low, lower high. And then, I'm assuming, well, we have earnings this week, but if there weren't any earnings, I would assume that price would try to test the top of this trend line once again and then potentially reject downwards, right? Or we can break the trend line and we can flip from a bearish sentiment into a bullish sentiment. Same exact concept over here. On this 1 hour time frame on Tesla, you can see I drew a trend line from the bottom all the way over here, all the way to the top over here. And you can see what happens here is we make a higher high, higher low, higher high, higher low, higher high, right? So it's only safe for us to assume that price can potentially keep moving on up, continuing the bullish sentiment, or we snap right through the trend line and we flip to a bearish sentiment, which is exactly what happened here. We broke the 1 hour trend line and then we started trending down instead of going up. Right, so when it comes to drawing trend lines, the general consensus of being able to solidify a trend as a legitimate trend is that it needs to have at least 2 touches excluding the starting point, right? So right over here is the starting point of the trend, of this high right here, right? Where can I find 2 more touches, right? So I see another touch right here, right over here. So if I just click this right here, you can see we have another touch here. And if I fix this just a little bit, you can see that we actually have 3 touches here, right? So we have 1 touch here, 2 touches over here, and then we have our final touch right around here, right? So this is a legitimate trend. Now, throughout the video, we're going to go over trends that you can use to actually trade and then trends that you should use to stay away from. In this case, for example, if price were to consolidate even more, right, and then eventually break out to the upside, right? So something like this. And then we draw a level right over here, right at 418, basically 490, right? We can actually use this level to our advantage as a trade opportunity because, first of all, we have a level that's been tested multiple times. Well, in this case, 2 times. 1 touch here and then 2 touches here, which is basically a flat top. And then we also have this downtrend, right? So if we were to break through this downtrend, remember what I said earlier, right? If we break downtrends or uptrends, the market sentiment is flipped, right? So after this downtrend breaks, we can only assume that we can expect more bullish upside on this break of the trend line. Now, would I trade this trend line? No, because there's not any sort of confluence that I can use directly with this sort of setup. But if we do break this trend line and hold above it, we have a flat top / key level at 419, 420 area that we can actually take advantage of, right? So that's one of the ways that you can use trend lines in order to help benefit you in identifying trading opportunities, right? So what is an example of being able to use trend lines to avoid trading opportunities? Okay, so here's a prime example of how we can use trend lines to avoid trading opportunities, right? There's a 4 hour trend line right here. As you can see, let me get rid of this one. We have 1 touch here, 2 touches here, then the final touch right there. And as you can see, we wicked right off of it during the pre-market. And if we come back over to the 1 minute where that general area of that trend line is, this blue line, if we just keep playing this forward, we should be able to see a rejection from that sort of trend, right? And which we did. We bounced right off of that 4-hour trend. Now, why would I avoid that sort of trend? Is because it is a downtrend channel, right? So if I do this, it's a downtrend channel. So playing any sort of breakdown or breakout towards the upside or the downside on these sort of trend channels are things that I would avoid when using confirmation for trades. Because overall, what these trend lines are basically telling you, the trend channels, they're basically telling you that price is supposed to stay within this range of this downtrend. So using the downtrend as a confirmation into a key level, these are the types of trends that I would stay away from in terms of using them as confluences to take a trade, because these are the types of trends where you can expect bounces and rejections off of them instead of breakouts. I'll also show you guys another example of Shopify that happened today. So we have this 4-hour trend line, right? We have one touch here, two touches here, and then basically during the pre-market, if I move this down to 1 hour, we basically have another touch there before we close above, right? But I believe we closed above during market open, right? So we have this 4-hour trend line, right? What's the next key level that we can use to take the trade, right? Now we broke this area right here, this resistance, but the next level we have is actually 110, right? So why do we like 110? The reason why we like 110 is because it's a whole key psychological whole level that big investors usually like to pay attention to, right? So this is in general a key level. And the reason why I would actually take this trade to the upside on Shopify is because we have this 4-hour trend line, and then it also aligns with a key level, right? So if we put this on the 1 minute, you can actually see that this is a pretty nice breakout, right? We went red to green right off the open, broke it, and then, just continued up basically the entire day, right? So those are ways that you guys can use trend lines to your advantage in terms of identifying plays. Now, in terms of time frames for trends, ideally you want to pay attention to the daily because the overall bigger picture does matter. 4-hour, then the 1 hour, and then 30-minute, maybe sometimes a 15-minute if it's a really solid trend line, right? But anything that's intraday, you can kind of pay attention to, but I would just use those as points of rejection or like things like that, just like things to be careful for in case price bounces off during the breakout or rejects during the breakout. Now, onto things that we don't consider as trends are things like these, quote unquote trends like these, where you see the stock hours algo actually plotted that for us, but these are more sort of flat bottom trends. They're more so like levels that have just been wicked past, right? So it just wicked past 103 and then bounced off of 103. So this is a trend that I wouldn't really consider. Other trends that I actually don't pay attention to are trends that have been closed above or below. So let me find an example here. Right, so actually, let's just use this previous example, right? We have this 1 hour uptrend, right? We close below it, right? So now I have no reason to pay attention to this trend line anymore. This is now invalidated because the uptrend has clearly switched to a downtrend, right? So once that break happens and we close below, and it's actually like a significant close below, there's really no point in keeping that trend line on the chart anymore. So that was a quick little video on trend lines and how you guys can use them to identify trading opportunities or to use them to stay away from trades. I hope you guys enjoyed this video. Make sure to like, comment, and subscribe to the Stock Hours YouTube channel. I'll see you guys in the next one. Peace.